Assalamualaikum and hi. Today me and the group we conclude about accounting for financial reporting. So, let me introduce my group first. My name is Siti Nur Humaira.
Hi, my name is Mashta Alawiyah binti Hamizan.
And my name is Muhammad Akmal Haziq bin Rosli.
So, this article that we summarize about it. The title of this article is A Closer Look of Accounting for Islamic Financial Institution. This article was written by Nurazlina Ismail, Senior Lecturer of University Teknologi Mara, Kota Baharu, Kelantan, and Zulkarnain Muhammad Sori, Professor IFNIF, the Global University of Islamic Finance, Kuala Lumpur. And this article was published in 2017. If you look at the detail, financial Islamic been growing quickly and has important elements of the global economy Sharia is a basic for financial Islamic. Sharia compliance products have covered a full range of banking, capital market, asset management and insurance. And Sharia also forbid involvement in illegal activities that are harmful to society. Accounting for Islamic finance is a challenge for the global groups with varied international stakeholders and extensive financial reporting. In Quran also consider this issue as a serious problem. Based on the Islamic perspective, it considers decision usefulness, stewardship, accountability, financial measurement, and disclose and presentation and conference about them in the light of the Quran and Sunnah. Based on conventional accounting is a method generally used by the manager within a company. Accounting from an Islamic perspective must identify socio-economic and religious events and transactions, whereas conventional accounting focus on identify economic events and transactions. To fulfill the requirements of accounting standards from an Islamic perspective, the Accounting and Auditing Organization for Islamic Financial Institution or IOFI was established in 1990 at Bahrain. The IOFI schools include development accounting and audit ideas that are pertinent to IFIs. Distributing these ideas and their application through training, seminar, the publication of predict newsletters, performing and commissioning research and other means. It also develops, promulgates and interprets accounting and auditing standard for IFIs.
Financial reporting for Islamic financial institutions. The existence and growth of Sharia business in the modern economy has led to the rise of accounting from Islamic perspective. This is because accounting from the Islamic perspective is based upon ethical laws originating in the Quran and Sunnah that requiring full disclosure of information in accordance with Sharia law and public accountability that focus on the community and participate in exploiting resources. Sharia transaction in Sharia business and IFE, there is a need for accounting treatment and standard devoted to Sharia. This is because conventional accounting is based upon modern commercial law. Accounting from the Islamic perspective has to transact based on Sharia, including a profit sharing account, a margin revenue account, and additional accounting reports such as statement of the sources and use of zakat fund yearly in its development. There are several epistemology approach in Islamic accounting, such as in relation to Islamic financial transaction, acceptance among the relevant players in the global Islamic finance industry is a key challenge, especially in accounting and reporting. There have been two main challenges for the role. First, the IFRS issued by the International Accounting Standard Board (IASB). Second, the FAS issued by the IOFI, which is of this. In fact, the AOSST is a working group on financial reporting relating to Islamic finance raised issue regarding to the application of IFRS to Islamic financial transaction. There are two contrasting views on how to account for Islamic financial transaction, which are first, that a separate set of Islamic accounting standard is required, or second, that IFRS can be applied to Islamic financial transaction. For this example of IOFI funds are not universally accepted. In particular, analysis of various sources state that accounting principles generally do not contradict the Sharia or accept the IOFI funds, but rely more on the IFRS to report their financial transaction in IFIS. Thus, 4 IFRS are used by accountants as vital guidance that influence transaction to IFIS. These are first, substance over form; second, the time of value of money; third, fair value measurement; And lastly, recognition based on probability. So now we move to data. Data is a discussion on key accounting assumptions that presented in the following section, which is sourced from financial statement of two IFE that operate under two different financial reporting regimes, namely the MASB and the IOFE. IFIS operates in a specific country like Malaysia and Bahrain, also will be bound by the rules and regulations declared by their respective regulators in the country. For example, BIMB and BISE.
So I will continue the presentation with the analysis of accounting assumptions. So for the analysis of accounting assumptions, we have four. There is substance of a form, time value of money, fair value measurement, recognition based on probability. So first, let's see with the substance of a form. In Islamic finance, one cannot have a transaction was substance indifferent from its legal forms. In other words, if a trade transaction is not a genuine trade transaction and is just a financing transaction, then it is not acceptable in Islamic finance. The form and substance of the transaction must be consistent and shall not contradict one another. The Sharia Advisory Council SAC of Bank Negara Malaysia BNM has adopted the majority view of recognizing substance of a form. Information about legal form may be relegated to the notes to the financial statements, but Shafi'i scholars favored the principles of form over substance. It claims that substance of a form is an unconcealed violation of Sharia. So for the second analysis of accounting assumptions, there is time value of money. The application of the time value of money is permissible only for exchange contracts that involve deferred payment, and it is strictly prohibited in loan transaction court. In fact, Islamic law recognized the selling price difference between a cash payment sale and deferred payment sale such as mudarabah. Sharia does not completely rule out the concept of time value of money. The fact that Islam does not prohibit any increment in a sale contract to be paid at a future date. So next, we will look to the fair value measurement. So for the fair value measurement, fair value is the amount at which an asset could be bought or sold in the current market. There are two prohibited sales, namely talaqi al-rukban, that is meeting caravans before they reach the market, and second is najh, false bidding. The Prophet said that do not intercept goods before they are offloaded in the market. A similar consideration is operative in the prohibition of najh, which is where a person bids in an auction without intending to actually buy, merely to drive up the money. It can occur without the seller knowledge. However, if both of them knew, then they share the sin. Last but not least, there is recognition based on probability. Probability is where the degree of uncertainty that the future economic benefits are associated with the transactions. The principle of probability in accounting and financial reporting from the Sharia perspective refers to the practice of recording transactions. In this regard, assets will be recorded once there is a probability of inflow of economic resource, while liability will be recorded once there is a probability of outflow of economic resources.
In conclusion, financial reporting in Islamic society should be more detailed, should consider more values, and emphasis on profit and loss statement, balance sheet, and cash flow statement. Furthermore, there are different opinions on how to account for Islamic financial transactions, which have led to disparate treatment of various transactions in various jurisdictions. It's essential to know and study further about accounting Islamic financial institutions in order to understand how it works more. That's all from us. Thank you for watching.